Alright, good morning. Let's go over today's trade plan. So in the overnight session, the equity markets just balanced in a narrow range on very light volume. We are heading into a long weekend, and with the NYSE closing early and the markets running on extremely low volume, at the moment we're running at about 50% relative volume, I think that it's going to limit the range on the day time frame, which leads to limited opportunity on the day time frame. So it's important to keep the market environment in mind, and in this type of environment where the volume is very light and the reward potential is relatively low, it's important to be even more selective on the trades that you take and be willing to basically have no trades on the day if you're not able to get good trade location with good reward to risk, because the market could just balance within a range today. We have on the upside 94 to 96 initial resistance, and right above it the all-time high at 98.5. Given the light volume, it's unlikely that we'll get a sustained break or even a break above the all-time high. So it creates a limited opportunity environment because we know that above 90 quarter, 91.75, buyers would be in firm control, but there's not a whole lot of upside in a market like this, especially when you look at NQ and it has resistance at 36.70 and then stronger resistance around 36.80 to 36.91. So when you take that into account, that NQ has overhead resistance that it's running into, TF has been diverging, and it has been the weaker market, and it has overhead resistance at 1121 to 1123. So when you take all that into account, just a sustained break above the all-time high seems like a low probability event. It doesn't mean that we can't slowly creep up towards 1898.5, but that's probably going to cap the upside on the day time frame. So let's just keep that in mind. Right off the open, keep an eye on 90 quarter to 91.75. Where we're trading in relation to that area can help us determine which side's being more dominant, which side's more in control. Holding above 90 quarter, 91.75 would tell us that the buyers are pressing here, and we could go up to 94, 96, and potentially 98.5. And in the event that we do break the all-time high, unless it happens very near the close or something where there's just not enough time left, I think that we will get rotation and we will get some profit taking up there at 98.5 or in that area. On the downside, below 90 quarter, we have support at 85 quarter to 87 quarter. It's still a spot where buyers can step in. This market is still a market with buyers in control, so a pullback to 85 quarter to 87 quarter could still attract buyers. It is an aggressive spot. It is essentially the top of the recent 2 to 3 day range, and it's the breakout area from yesterday. So if the buyers are going to maintain control and stay firmly in control, then that's the spot where they can still enter. Below that, we have yesterday's low around 1883, and then support at 79 to 81. Given the light volume, in the event that we get an extended move lower, the range will likely be exhausted by 79 to 81. So we don't necessarily even have to get all the way down to that zone, but if we do, we'll probably be exhausting the short-term range on the day time frame, and then buyers can step in over there and push ES back up towards 85 quarter to 87 quarter. So on the downside, we can still expect buyers to be active at the support zones. The only time where it calls for being cautious at support is if we're getting a directional type move right off of 90 quarter. So we have the new home sales number out at 9 a.m. Central, and in the event that there's a negative reaction to that and we start selling off on higher momentum and higher volume short term, then you might push a little bit lower before the market starts balancing again. But overall, we're in a very balanced type market. Buyers have been more in control and more dominant, but on the day time frame today, with volume running really light heading into a long weekend, I think it might just be a continuation of that two-sided theme where pullbacks attract buyers and any moves up into resistance or close to the all-time high attract sellers and some profit taking, and the market doesn't really move too much in either direction. So that's really what creates this environment of very limited opportunity. So that's something to keep in mind. Aside from that, in NQ, off the open, we'll be watching 36.56, a important HVN, and if we can start holding above it, then NQ can try to make a run up to 36.70, potentially 36.80 to 90, and that would likely cap the upside in that market. TF, if we can start holding above 11.12, we can target 11.17 and potentially 11.21 to 11.23, but that's probably going to cap the upside in the Russell. And then heading into next week, it'll be important to see how well these other markets are holding up, and that'll help us determine whether the S&P can break to a new all-time high, or are we going to see a pullback and a potential reversal on the larger time frames. So that's something that's yet to be determined, but I think next week we'll get clarity on that idea as well. But on the day time frame, these are really the main ideas. Let's see if the buyers are able to hold it above 90 quarter, and we'll take it from there.